Disclaimer: the information provided is for general informational purposes only and does not constitute legal, tax, or financial advice. You should not act upon the information contained herein without seeking professional counsel from an attorney, certified republic, accountant, or other qualified advisor who is familiar with your individual circumstances. So, you're working at a local pizza restaurant. You start the day off as normal, ringing customers up as usual. Suddenly, a person walks up and shoves a phone in your face, stating, "I'm here to pick up a DoorDash order." You grab the dasher's order and you stop to ask them questions about dashing, such as, like, what do you like most about it? The dasher responds, "Oh, it's great. I get my own schedule, work my own hours, and have a second income on top of my regular income." That conversation has sparked your daydreaming about the little extra cash you could make and how you could be your own hypothetical boss. With the dream in your head, you open your phone and you apply to become a dasher. Congratulations, you got the job. And while applying, you notice a different tax form. See, while at the pizza restaurant, you filed what's known as a W 2, but at the DoorDash company, it talked about a 1099 NEC. You were confused and have no idea what that means. Tax paperwork for younger folks and us adults can be quite scary, but hold your breath, grab some popcorn, and let me help ease your fear about your newfound 1099 NEC. Now let's start off with topic 1. What is a 1099 NEC? First, let's break down the obvious elephant in the room. What is a 1099 NEC? A 1099 NEC is a federal tax form used to report income that is not provided through wages, tips, and salaries, and the NEC stands for non-employee compensation. You may be asking yourself right now, non-employee, how can I be a non-employee if I'm already hired by DoorDash? Well, I'm going to be explaining that now just for you. First and foremost, to qualify for the 1099 NEC, you will have to receive $600 in fees, prizes, and awards given for service, and of course, commission. In general, anything that a company pays you to complete services, but not as an employee's salary or paycheck. A 1099 NEC form is not the only 1099 you will encounter. There are others such as a 1099G, a 1099 LTC, a 1099 SA, and several more others. We will not be going into details about those other forms of 1099s, just the 1099 NEC, which is more commonly used form, but now you are aware that there are other forms out there that the IRS does use for other things. Now, on to the 1099 NEC tax form. This is some of the information that you will see on the tax form, such as the business name, the business's address, and the taxpayer identification number, the TIN for short. This is so that the IRS can make connections as to where the money from the company is going and how you receive the money you earned. Your personal information will be on the form as well, such as your name, your address, and TIN. Remember the taxpayer identification number I mentioned earlier in the video? That number is going to be your social security number, SSN for short. Okay, let us now take a deeper look as to what you need to fill out on your now new 1099 NEC. In box 1, you will have your total non-employee compensation. That is the total compensation income you received not in the form of salary or paycheck as a total for that year after you qualified for the 1099 NEC, as I said earlier in the video. In box 2, DoorDash will only fill out if they made over $5,000 in direct sales of consumer products given to you for something such as resale. In box 3, it will not be used for a 1099 NEC and should be discolored so that you know it is not relevant. In box 4, it is for federal income tax withholding. If any money was withheld from you for federal income tax purposes, it would be told to you in this box. In box 5, it is for any state income tax that was withheld from you. The same as box 4, but for state income tax and not federal income tax. In box 6 is where the state identification number will be presented. That is a number given to the company that is paying and is uniquely assigned by the state. And finally, in box 7 shows the NEC that is subject to state income tax. Topic number 2, federal income tax percentage. Now you know the basic layout of your new 1099 NEC. Let's discuss the federal income tax percentage for the 1099 NEC. A federal income tax percentage is a tax percentage on your full year's wages on all your unreported income throughout the entire year. This percentage is used to cover Social Security and Medicare. So, you finished the year 2026 with DoorDash. Congratulations! Now it's tax season, everyone's favorite. An email from DoorDash appears on your phone. It is an electronic copy of your new 1099 NEC. It has all the paperwork/information we discussed earlier. Now you know what all the boxes mean. In box 1, you see the total of your 2026 non-employee compensation. That year you made $15,000 of unreported income to the IRS. Now it's your turn to report that income. Because you haven't paid any taxes on the income, it's now your responsibility to do so. And you see the federal income tax percentage is 15.3% of your total yearly income. What does that mean, you say? Well, that means you take the total yearly income, so $15,000, and you're going to multiply that by 15.3%, or 0.153, and you will see $2,300. I rounded that number up for the video. And you think to yourself, oh no, I don't have $2,300 currently on hand. Well, I have some good news for you, not just because you don't have the money on hand, or you can also use this as a way to save a couple bucks. Topic 3. What is deductions? What is a tax deduction? Tax deductions are expenses that correspond to the needs of the business and can be subtracted from the total income to lower your taxable income. For example, for DoorDash, it would consist of tracking miles, tracking gas, lunch that you purchase while working, car insurance, leasing vehicles, phone bills, and several others. Just remember though, you can't use all the deductions available or listed for your tax deductible income, and that all tax deductions must be for business purposes only. Now, on to DoorDash deductions. Mileage is a more common tax deduction for DoorDash. You track your miles driven while working and use the IRS mileage rate to formulate an amount that can be taken off from your total revenue that you made in that year. To solve the tax deduction mileage rate, you must multiply the IRS standards mileage rate by the miles you have driven for DoorDash. For example, you drove 10,000 miles for DoorDash in 2025. You go to the IRS website and you see that this year they are allowing with their estimates 70 cents per mile. Now you take the 10,000 miles and multiply by the IRS mileage tax rate. So 10,000 miles multiplied by 70 cents would equal $7,000 in tax deductions off your total revenue. To now make your new taxable income, which would be $15,000 minus $7,000, that would equal $8,000. That $8,000 is now the tax income, meaning you will multiply $8,000 by 0.153, which would equal $1,224. That is now owed to the IRS in self-employment taxes. So you just shaved off $1,076 off your owed taxes. It is important to note that you should always be thinking about your taxes and setting aside a planned income for your taxes. There are other examples of tax deductions as shown in the above listed options earlier in the video, but you can do mileage mixed with car-related deductions. For example, gas, insurance, tires, or car payments can't be deducted with mileage, but you can do meals, hot bags, and phone bills with mileage deductions. To keep a short story sweet, I won't go into extreme detail in deductions, but if you'd like me to make another video solely on deductions, please let me know in the comments. You have now completed your first 1099 NEC as a dasher. See, that wasn't so scary after all. You have now turned all your unreported income into reported income to the IRS. Some time passes and you get a letter in the mail from the IRS. You open it and delivered to you is bad news. You've been audited, meaning that something was suspicious or inconclusive to the IRS. Therefore, you now must solve this issue, and to fix it is extremely important to remember to always, and I mean always, document all of your transactions, whether it's for deductions or for life purposes. You never know why or what you'll need it for. So just because we're in a time of technology, as the old man would say, save those receipts. Don't worry, the key is to remain calm. To answer the call of an audit, you must show proof of all your claimed deductions you put for your taxes that year. From there, the IRS will determine if the information that you provided is truth or that is too suspicious. If the audit remains, you must pay in full 15.3% to the IRS of your taxable income. But our story is different. Congratulations, you got word in the mail that the audit was reversed and that the IRS deemed the deductions as plausible and conclusive with the evidence you provided. Always again set aside for moments like those and document all of your work. You can now complete your first federal 1099 NEC and many more now that you know some of the possible bumps on the road. Don't be afraid to take risks. Life isn't so scary after all. Thank you, and I hope we helped and that you continue with us on future knowledge journeys. Goodbye. Disclosure. Pursuant to the U.S. Treasury Department regulations, any tax advice contained in this communication is not intended or written to be used and cannot be used for purpose of avoiding tax-related penalties under the Internal Revenue Code or promoting, marketing, or recommending any transaction or matter to another party.